Yes. All right, my people, as you already know, I still remain your own favorite boy, Abdul Fatai Ekfest Academy. Good morning, good afternoon, good evening, depending on where you are watching me from, or depends on the time you are seeing my video. In today's episode, I'll be talking about candlesticks, all right, because every single candlesticks in the market tells a story. All right, we knowing the story the candlesticks are telling us help us in making better decisions in the market in the long run. All right. So first of all, I want to wish all my fellow Muslims, brothers and sisters all over the world a happy Ramadan, and I wish you all the Al-Barika blessings that comes with Ramadan. All right. So without wasting much of your time, let's head over to the other side of my so all right, so firstly we're gonna be reading about the candlesticks in this website baby peeps. Okay, so we can get more of understanding about the candlesticks. All right, okay, so now let's start. Top 7 candlesticks patterns to use in trading forex and crypto. Okay, that's the title. Okay, now let's read. Have you ever entered into a forex or crypto trade only to see the trend reverse? It's a question, okay? Or have you ever tried to pick a top or bottom in crypto only to see the trend continue in the original direction? It's also a question, right? If so, then you are not alone. This situation happen all of the time to crypto traders because they are unfamiliar with popular chart patterns. Okay, one of the fastest way to learn crypto trading is becoming knowledgeable about the powerful and popular Japanese candle patterns, as they indicate if the trend is about to revise or continue further. All right. Top 7 candlesticks pattern. Japanese candlesticks are a technical analysis tool that traders use to chart and analyze the price movement of crypto. Mind you, not only in crypto, also in forex, futures, any trade. Okay. A Japanese candle, a a Japanese candlestick is a type of price chart that shows the opening, the closing, high and low price points for a given period. Okay, a variety of patterns will form based on the relationship of the opening and closing, as well as high and low prices for the candlestick. Technical chart readers will review these patterns to determine the large crypto trends. Okay, these are over 60 different candlesticks patterns, but don't worry, as you don't need to know all of them to be successful. In fact, we have distinct the Japanese candlesticks pattern down to the top 7 that are easy to spot and often excellent signals. Okay, 1. The hammer candlestick pattern. All right. One of the most popular candlesticks patterns is the hammer. The hammer indicates a downtrend is turning into an uptrend, and that traders will want to buy Bitcoin. All right. Mind you, it's not always in Bitcoin, in forex, in futures, and all of that. So this is the picture of the hammer. All right. So what is hammer? What is the story behind an hammer? An hammer simply means starting of the reversal in the market. Okay, let's say for instance the market is a downtrend. When the market got to our support level and printed an hammer, what is the story behind it is the sellers has exhausted. Okay, now the buyers are stepping in. Okay, that is where we have the long wick and the upper body. Okay, because the buyers are now gaining more power over the sellers. All right, maybe if you want to use it to take a trade, you simply wait for the next candle to form. Maybe the next candle will be an engulfing. That gives you the final confirmation to buy. Okay, there are even some people who buy when they see this armor only. Okay, mind you, you don't just only trade candlesticks, you trade them with your strategy, your technical analysis and all of that. So it's an additional tool for you to know what they are telling you. Is very, very important. It allows us to make better decisions in the market. Okay. Now let's continue. This hammer pattern is extremely popular because it is simple and easy to spot. It consists of one candlestick with a large wick to the downside and the relatively small colored body at the top. The small body indicates that the open and closing price are fairly close to one another. All right. These patterns is most effective when it forms towards the end of a downtrend, as it suggests price traded significantly lower but then revised to close in the upper half of the candle's range. That revised in sentiment can often lead to a large reverse of the downtrend into an uptrend. Okay, bam, that's it. 2. Bullish and bearish engulfing. Okay, the engulfing pattern is another popular formation traders follow. The engulfing has a bullish version called the bullish engulfing, while the mirror opposite is the bearish engulfing. All right, this is a bullish engulfing. What is simply a bullish engulfing? A bullish engulfing is simply means, for instance, the market is coming down. When the market gets to our support, maybe there will be a one particular candlestick that will be very giant, okay, with the full body and engulfed the previous candles. Okay, the red candles has been coming down, they get to our support level, and you see one giant candle massively engulfed the previous candle. That is an engulfing. What the market is simply, what the candle is simply telling us, that the buyers have gained control, have gained their strength and overshadow the sellers. Okay, it's a very bullish engulfing. It's a reversal candle, a powerful one at that. Okay, vice versa, the opposite is the bearish engulfing. Okay, where the market has been going up and maybe the market gets to our resistance level, and we automatically saw a bearish engulfing that engulfs the previous candle. Is either 1, 2 or 3, engulfed it. Okay, that is bearish gaining power over the bullish. All right, so that's just it. Okay, let's continue. The engulfing pattern consists of two candles. All right, the first candle will follow the direction of the previous trend. In the case of the bullish engulfing, the first candle will be red. Then the second candle will punch a new low but close above the opening of the first candle, essentially engulfing the first candle. Okay, the opposite is true for a bearish engulfing, where the first candle is a small green body and the second candle is a large red body that completely engulfs the body of the first candle. Okay, the engulfing is a reversal pattern that signals a strong trend change within the market. Bam, that's it. All right, now theory, shooting star. Okay, the shooting star is a popular pattern widely followed by traders. The simplicity of this single candle pattern helps make it popular. This is the photo of the shooting star. Okay, now a shooting star is also a reversal candlestick. All right, let's say for instance the market has been bullish for a while, and when the market got to our resistance, we saw a shooting star at the top. Okay, when we saw the shooting star at the top, that signals the bearish have started gaining strength. Okay, they have now overpowering the buyers. The buyers have exhausted while the sellers have started gaining strength. It's a very good reversal candlesticks. Okay, now let's continue reading. The shooting star will have a long wick emerging from the top of a smaller body. This means that price opening in the lower position of the candle's range traded to new high, then immediately retraced, closing near the open. The color of the body is insignificant to identifying the pattern. When spotted, the shooting star alerts crypto traders to the end of a bullish trend. Okay, like I said with my explanation, so is a starting of a bearish trend, is a starting of a bullish trend exhausting. Okay, and a starting of a bearish trend gaining their strength. 4. The doji. Okay, the doji is another single candle pattern that is the easiest to spot on a price chart. The open and close of the doji are nearly identical, coupled with a high and low range that is relatively small. As a result, the price action forms in the shape of a plus sign. Okay, this is a doji. Okay, there's different forms of doji, but most of the time it forms like just a plus or a cross, whatever you can call it. Okay, so what is this doji indicating? It's indicating an indecision in the market. Let's say for instance a market gets to our point of interest, it's either support or resistance, and you saw this doji, is telling us that the buyers and the sellers are fighting and nobody won. Okay, the bulls and the bears are struggling. At the end of the day, nobody won. So when you see this doji, it's not, but the story is telling us that nobody won, but we need to pay more attention on the next candle or next few candle that will open after this doji. All right, that's just it. The doji is not necessarily bullish or bearish. The doji is considered neutral due to the indecision of the market, creating similar opening and closing price. All right. When a doji is spotted, it simply means the market is pausing and that a continuation of the trend prior to the pattern forming will ensure. 5. Inside bar. Okay, for me, this 5 we're going to jump it because it's still more like an engulfy. So let's just jump it. Key reversal. This is more like an engulfy as well. So as you can see, it's engulfy. Now let's go to this 7. Morning and evening star. Okay, this morning and evening star is one of the most powerful chart pattern that's almost, when you see it, it's almost impossible for it not to work in your favor. Okay, so if you use it rightly. All right, so the final candlestick pattern that every trader out to know is the morning and evening star. This pattern consists of 3 candles. The bullish version is the morning star, while the first candle is a long red body, followed by a small body to a new lower that pushed to a new low. Then the third candle is a large green candle that returned close to the opening price of the first candle. Okay, this is it. The morning star is the 3 candle. Firstly, we have a little morning star here, and the third one is the bullish engulfy. Let's say, for instance, the market, it is a downtrend, and we go to our support level and see this pattern. These 3 candlesticks is a very powerful reversal pattern. Okay, it's very powerful, trust me. The opposite of it is the evening star, which is if the market is an uptrend and we go to our resistance level and see this evening star, this 3 candle, trust me, it's a very powerful reversal pattern to the downside. All right, so I think it's finished. Conclusion. Japanese candles are a chart reader's dream. These are dozens of patterns created by the candlesticks that alert traders to the trends of the forex and crypto market. The top 7 candlestick formations are popular amongst traders because they generate strong signals and are easy to spot and interpret on the charts. All right, so now let's go to our charts and spot them. Oh, so all right, so as you can see, we are in a clear downtrend, and where we had the pullback, clearly we spotted a shooting star here, a shooting star, two shooting star, and nextly we saw a very bearish engulfing. So we just need to pay attention to those candlesticks. Trust me, it helps a lot. Now, seeing this shooting star, what does it indicate? It indicates that the buyers is exhausted, and we already know the original trend of the market is a downtrend. Okay, when it got here, you can see it's telling us that the buyers has exhausted and the sellers want to continue their trend. Okay, they are ready to push the market lower. All right, so but you see the next candle, you see we have a very massive bearish engulfing. Okay, then we can say sharply. Now, as you can see, next to it, we also have network. As you can see, next to it, at this other block there, we also have a very engulfing candle. This is a clear example of what's all right. So this is a clear example of an engulfing candle. Okay, we have our engulfing candle there. When the market got to our support, sorry, to our resistance level, which is our other block, we have a very strong bearish engulfing candle that gives us the final confirmation to enter this trade, to short this trade. All right, now let's be spotting them. You can see now, as you can see here, another engulfing candle. So this is not a strategy, we are just showing you the candlesticks, how powerful they are when you spot them in the right place. All right, now let's see a very sweet example here. This is the morning star. Okay, the morning star. Okay, now the first candle, we have the second candle printing a morning star, and the third one we have a very bearish engulfing candle. Anytime you see this pattern, okay, at the right place, trust me, it's almost impossible for it not to work in your favor if it's used the right way. Okay, now, so that's just it. Just do your homework, back test, and look at the doji hammer. All right, we have an engulfing, you see, pushed up. So you see, engulfing, pushed up. All right, see, this pattern is more, is also more like the you know the morning star. All right, so trust me, the example I showed you, that is more like a textbook. When you open the real chart, you just have to train your eyes to see them whenever. Okay, you just have to train your eyes to see them, because in the chart, in the live chart, is a little bit different from from the textbook in online. We explained it for. Okay, now this just it. Okay, If you watch this video to this extent, okay, please kindly comment, share, like, okay, hit the bell icon so whenever I drop an educative content like this, you will be the first to know. Okay, stay tuned, stay blessed, see you in my next video.